morning, everybody. Welcome to the Trading Market Technicals morning call video for Wednesday, January 16th. We're in the middle of the month, and we literally have gone nowhere in the markets. Another choppy inside day, if you will. Markets really in this tight range. Energy is building. We did have a massive distribution day in Apple. I want to get into that when we get to the charts, and I did a little bit more of an in-depth analysis. So I'll give you my thoughts of where we are, where we're headed, and I do see some positive divergence. But again, we're going to need really price to prove that positive divergence is going to play out. Just like we mentioned many months back when we saw that Apple turned into a sell. We had some negative divergence right around the 690-ish area. Anyway, want to run through the numbers real quick. Gold up 7, S&P up $1, Dow up 27, continues to chug along. I think that's partly due to the transports. Last night we had some nice selling in the Asian markets. Shanghai down 16, Nikkei down 278, Hang Seng down 24, and you're down in the early morning hours right now. Euro to FTSE down 33, the French CAC Caron down 11, and this is normal, and I do think that we're due for a pullback, and we had that 1 to 2 day pullback, which I mentioned back a couple of weeks ago. We really went nowhere. I think less than 1% or 1% anyway, for that matter, and markets continue to move higher. Now, I'm not saying that the markets will continue to move higher and just chugging along on no volume, but there's you know, at one point in time, enough's enough, and markets got to come back to some sort of volatility. I mean, it's now we're our third week, and when I show you the 10-minute chart, you'll see what I mean. When you're an active trader looking for something to do, sometimes it's always best to just sit on the sidelines unless you can find something that comes your way while you're sitting in front of those trading screens. Anyway, I'm not going to get too much into the indicators. Again, guys, I apologize. I can't sugarcoat anything. There's really not much going on. Here's the NYMO. Yesterday, NYMO was at 30 and change. We have a negative change of 79.79, which is pretty terrible. I mean, this is what nothing has moved. And I want to show you the NASDAQ percentage high index. And you can see up in here, we're still at these lofty levels. We're down 4. I mean, literally nothing has moved, which tells me, again, energy is building. Can we break out of this range and really on volume and try to test those highs right around that 1,500 and change? Absolutely. So that's why I wouldn't just go out and short the market. When the markets are sitting here at the highs, consolidating, it's a tricky move. I mean, I do think there's probably a push to the upside. I'd like to see us at least maybe come in 2, 3, 4% would be real nice. Even try to fill in that gap halfway, and then look to buy stocks before we get our seasonal weakness coming in, which is early spring. But take a look at this. You'll see what I'm talking about. S&P. Stocks above the 50-day moving average, elevated, way up in here. This is really a warning sign saying, hey, you look to take profits. And this is exactly, if you see here, these times when we get these sell-offs here and here, here and here. Same thing with the buy side. I have these buy side arrows in here. But we're in these lofty readings here, up 90. And if you look at the stocks above the 200%, I mean, we're at 419%. I mean, that's just totally crazy, and we haven't even sold off yet. I do see market weakness here intraday a little bit, and we are down a little bit in the overnight session now, down about 3.5 S&P handles, but obviously that's nothing that could change between now and the opening. Lots and lots of earnings are starting to report, some key bank earnings. That's going to be, I think, a big market driver, as well as technology. So this is something that we're going to need to watch, but early warning sell signals here in some of these indicators. Now, new highs, new lows, as you can see here where I pointed out in these circles. We have these tops. We have a top here. We sold off very, very slightly. That was probably that 2-day pullback, and then we're back at these elevated levels here. And new highs now are starting to wane, if you could see this here. You're starting to as the market continues to chug along, new highs. We're not making new highs here. So just another warning sign. Those are the best of the indicators that I want to show you. I'm not gonna sit here and run through all these indicators that haven't done anything. I want to get now right into the charts here. Now here's the spiders. As you can see, volume has been pretty consistent for the last 5-6 days as we've been up here, but we're hanging above this area. We're hanging above this range. Market dipped down to that 146 area in the spiders, but now we're back up above it again. So again, constructively bullish. However, we're overextended, so we have to take note of that and use caution when you're trading the markets. S&P cash was sitting right into this area of a resistance zone. A break above this, I would have no problem saying that this market probably run up into the low 1500, 1520 area. And again, inside day for the last 4 or 5 days. Very, very quiet. Can't stay like this forever, obviously. But patience is definitely a virtue in this type of market, at least for the last 10 days of the new year that we just had. Be very patient, but markets are going to move, and they will move in a big way. I can tell you by looking at the forex markets and looking at what's happening here in equities. Markets are ready to pause to do something, and sure enough, I do think that the markets will test the highs at one point. I think it'd be a better shot to take roll back into the 1420, 1430 area. S&P 60-minute inverted head and shoulders, still constructively bullish. We are bullish. We did trigger 1513 is the target here on the inverted head and shoulders on the 60-minute chart as well. So this is something that we'll keep an eye on here. And again, that could happen in 2 days. Here's that 30-minute S&P with the Bollinger Bands. I mean, we are getting so tight here with these Bollinger Bands that we're ready to make a move. And to me, I think if the market does break out to the upside here, I think that's going to be a great swing short. Without a pullback, I think if the market runs and really puts some sort of a capitulatory top with high volume, big large candle, I think that's going to be a cue to get short the market or buy puts in the market here, because that's going to be the cue when that market's going to start to reverse. I'd like to see the market pull back, choppy, slow volume, and buy that dip. That's what I'm really looking for. As you can see here, guys, we really have gone nowhere since the market has began in January 2013. Here's the diamonds, and again, diamonds continue to move up higher, and I think partly because of the transports are moving up, the Dow theory. So this is something really interesting that I'm watching, that we did sell off, and then the markets came right back and was bid right back up again. So there's no question that the market has a bid to the market, but I would definitely use caution. Again, if I would not be looking to build new swing positions here. Day trading is one thing, and even day trading has been pretty difficult because we have lack of earnings. They're starting to come out now. Lack of earnings, and when you have the market with extreme complacency, no fear, every dip is being bought, so it's very difficult to look to buy the market at these levels. But even when you're shorting the market, people looking to buy dips here, so we need to really kind of use a little caution, keep your stops tight, and I like to look for relative weakness to what the market's doing at these lofty levels. That's just me. That's one of my styles of trading. Look at the transports on fire. We were calling this market down here, saying if it holds here, we got a good shot. We do have some seasonal strength as going into the holiday season. Sure enough, we did. We pushed down and we broke right out of that, and that was that fiscal cliff deal, and see you later. The markets are now getting way overextended. Look at the MACDs. Look at 97 in the stochastics. I would not be looking to build any positions in the transportation sector without a decent pullback, at least to the 20-day moving average, which would be this upper area resistance and the beginning of that gap area, which would be that gap area support. Ultimately, again, love to see this market come into that area, but we'll just take it one day at a time and see what happens. Russell on fire, really good, constructively bullish. That's what you want to see. Risk on, markets dipped, and we have put in a big candle back above here, taking out the highs again. 89.50 is still going to be the area for this inverted head and shoulders. Nice volume yesterday. Russell was one of the most active indexes that we follow out of the 5. So this is a good sign, risk on. But if you looked at it, there were only several really big key stocks in the Russell index that were moving. A lot of the small caps didn't move, and I do like to play the small caps, but we really didn't see much movement in that. So that's something, again, just a little word of caution. And also, when you have a lot of the smaller caps, if you will, the crappy stocks moving last, then that's usually a sign that the market is starting to top. Okay, now let's take a look at Apple here. This is the last thing I'm going to talk to you about Apple. Yesterday I went on and I mentioned, look, if I wouldn't touch this, I think Apple goes lower. If you wanted to put a $500 bid in, use caution with a real tight stop. Obviously, market sold off right through the 500, was down. This Apple's been down almost 30 points in the last 2 days. This is the target area here. I've had this on for the last month and a half. As you can see, we are deeply oversold. Okay, and I do have some positive comments on Apple. I'd like to see a flush here in Apple to the 570-ish area, 565 area, hold, and then I think Apple starts to move higher, at least in an oversold. Remember, Apple's reporting earnings, and I want to show you the daily chart now to tell you what my comments are. Okay, we have some positive divergence brewing here. Okay, from this move lower. Now, I'd like to see a capitulatory sell-off into that 565, 570 area. Now, seasonally, technology sector usually gives you a good move to the upside. Apple obviously is technology stock, as well as earnings. We may see a good upside surprise in Apple's earnings because of the holiday season. So if you're going to look to take a shot, and I mean totally a shot here, this isn't trading, you might want to look to buy Apple at 465, 470, small enough that if Apple does not beat earnings, which I never like to hold through earnings, and I'm going to make that clear. I do not hold stocks through earnings unless you are hedged with some sort of a bull spread, bull call spread, or some sort of an option strategy. But if you are looking to do that, this would probably be the time, since we have positive divergence, seasonal strength in Apple and in technology sector. So one more push lower, and we like to get volume here. We do have higher volume, which is good. Massive distribution day. We had a little over 31 million, which I mentioned in the last video I like to see. One more push into that 460-ish, 470-ish area. That's where I would look to start accumulating Apple. Now, if Apple does not, let's say if it breaks this area, if you go back here, this is going to be your target. It's going to be in this gap area here, 420-ish. It's going to be the next buy-in area. So be aware of that. 420 will be the next buy-in area. So if you're, make sure if you're looking to build a position, you have enough ammo to build into that 420 area. And if you don't think it can't go there, nobody thought Apple was going to 500, and now it broke 500. So please use just a word of caution. Be very, very careful with this stock. Play extremely small if you are looking to do this. Now, again, positive divergence building, as you can see here in Apple. We call the top on this here when we had negative divergence building here. So it's just the opposite. And this head and shoulders measures right around the 460, give or take 5 points or so, guys. 465, 470. If it gets right into this area here, this head and shoulders pattern will probably be the target. That would put us right into the second long-term support area, and that's where I would really start nibbling into Apple being long. That could happen today, okay? Just a word of caution. And then, of course, technology, as you can see, Apple did pull back, Q's did pull back again, and this is actually a good sign, because if technology is seasonally have some strength to it, this is where you want to look to probably maybe look to start buying some of the Q's. Again, heavily weighted with Apple, so you got to use caution if you're playing the Q's long when Apple is actually weak. So keep an eye on that, and just a little word of just a little update on Apple. But I'm really interested to see what's going to happen in the next couple of days. Have a great day, everybody. Be careful out there. Use your stops, and we will talk to you tomorrow. Take care.